Hello. Welcome to Multifamily Mondays. It is Monday, 12 p.m. Eastern Standard Time, and we go live every single Monday for Multifamily Monday, talking about everything to do with multifamily real estate. Today, we are talking about build-to-rent communities, and we are talking about and answering three specific questions. Are build-to-rent communities a good investment? What are the drivers behind this big surge in build-to-rent communities, and do they actually make sense, whether or not they do? And then what kind of premium build-to-rent is getting in today's marketplace. And plus, I'll be joined by August Biniaz, my good friend. After the break coming up, we have some tech issues right now that we are trying to sort out, but I'm sure we'll get August in here in a little bit to discuss investment opportunities in this growing and exciting investment class. But first, check out this t-shirt. I'm not sure if you guys can see. Unit size matters. We were at the Wealth Hacker Conference on Saturday. We had a booth there. Great time. Big kudos to Erwin and Cherry Cito for putting that on. That was awesome. Jesse Isler was a great speaker. But basically, these t-shirts stole the show. Everybody was coming by, taking pictures and sharing them. So I have some exciting news. We are actually giving away some free t-shirts today. So all you have to do is like and comment on this video right now live, and we'll be announcing the winner of the free t-shirt at the end. So we've got a couple different options for you. Option number one is the unit size matters. This is my favorite. I think it's amazing. And then we also have a nice t-shirt that says Mogul in the Making. Your choice, whichever one you guys want. But just make sure you like and comment on this video. And Katie, who is behind the controls, will be picking the winner at the end, and I'll be announcing that. And I will ship it to your house for free. Doesn't matter. All you have to do is like and comment. So let's get into the subject for today, which is build to rent. And build to rent, I didn't know this, but build to rent is going to see $40 billion of investments funds put into that sector in the next 18 months. $40 billion. So obviously it's something worth talking about, and that's exactly what we are doing today. So let me hop over to the whiteboard over here. So let me just write $40 billion right here. So $40 billion. I feel like Dr. Evil when I say $40 billion. Okay, so we got $40 billion. So first of all, what's going on? What is build to rent? Before we can go into all the good stuff, just in case you're not sure. So basically, you hear me talking on this channel a whole lot about value add multifamily investment opportunities, right? So that's where we take an underperforming apartment building or apartment community, and we do some work to it, whether it's physical work or operational improvements. We fix it up, bring it up to standard, increase the rents, make a better living experience for the tenants, and that's our business plan. Well, build to rent kind of takes the foundations of multifamily real estate and applies them to purpose-built rental houses. Typically, they're detached homes, or you can also have townhomes. So, what we're doing is you're building out the product for the sole purpose of renting it out. So, rather than having a 100-unit apartment building, you could actually build out 100, townhomes, 100 detached homes like that, and its entire community. So you're building the entire neighborhood just for the purpose of renting it out, right? So obviously it's going to change how you approach the build. You're actually adding construction components for longevity of the actual materials. You're making sure it's durable, and you're having the tenant in mind rather than a homeowner. So you make some minor tweaks along the way. And there's some really interesting stats with build to rent. And I wrote them down here because there's no way I would remember all these different stats. So the one that really stood out for me is there has been 106% increase in the number of build to rent communities over last year. So if we look at 2021 versus 2022, we have 106% increase. So obviously this sector is booming right now. And when we go back to the previous year, we had a 37% increase. And this has just been skyrocketing and rocking and rolling right now. This sector is absolutely exploding. So what's actually driving this explosive growth? There's two main things I want to highlight in today's video. So I need to grab my eraser here because I just made a big mess of the whiteboard and I was writing way too big. Okay, so number one, I want to talk about the state of the housing market and what's really and what's the impact it's having on homeowners and potential homeowners. So I'll cite some U.S. statistics here, but it's basically the same thing in Canada, if not worse, in terms of affordability. So right now we are becoming a nation of renters. And what I mean by that is, before you had like the American dream, the Canadian dream, you would, get a job, you would buy a house, you would have your white picket fence, you would raise your family there, and you would pay off that house over time. And then, basically you die, you pass it on, or your kids sell the house. That's like the Canadian or the American dream. Well, that dream is changing. We are really shifting towards like a European mindset now. Europe is hundreds and hundreds and hundreds of years ahead of us in terms of development, right? Europe has been there forever. I was just over in England and Scotland. You're looking at buildings there that predate the existence of Canada or the US by hundreds of years, which is really cool. But what that means is over in Europe, you have a lot more renters, right? Home ownership, land ownership is a lot more expensive, and it's not accessible to everybody. And the same thing is happening here right now. So the US average rents are up 10.9% over last year, right? So rents are going up, and they have been going up for a very long time. And right now we have a very high cost of ownership. So home ownership, the cost of which is significantly increasing. That's being fueled by two things. So the first thing that's fueling that is debt. Right, we've all heard about all the interest rate increases. That's going to impact variable rate mortgages, bonds as well. That impact, fixed term mortgages. Whether you're in Canada or the U.S., slightly different mortgage structures, but generally speaking, it's becoming a whole lot more expensive to borrow money to buy a house, and then qualification becomes a whole nother issue. Because what's happened now is we have inflation eating away earnings, right? Right now, if you have money saved up in the bank and you're planning on buying a house for yourself to become a homeowner, you just lost 11% of your money. So if you had $100,000, you just lost $11,000 just to inflation sitting in the bank. So your purchasing power with your dollar is steadily decreasing, and inflation isn't going away anytime soon. The central banks are putting all the stops into place, and it's not really doing too much right now. And also we have debts. The cost of current debts is going up too, and that's going to limit disposable income that people then can put into buying a house. So that's what's really driving a lot of potential homeowners over to renting, right? You can rent a place, you need your deposits, and that's going to vary depending on where you are. But generally speaking, you have your first month's deposit, your last month's deposit, maybe a damage deposit. But that's all you need. You don't need hundreds of thousands of dollars just to enter the housing market. So people are becoming renters, often by necessity, not by choice, which is a big driving factor right now in terms of the tenant pool, and that's putting upwards pressure on rents. Inflation's putting upwards pressure on rents, but also the demand for renters. And every time, it's really interesting. Last week in my live stream, I talked about the upcoming or current recession, depending on who you listen to. And, during recessions, the number of tenants, the tenant pool grows, right? Because less people purchase homes, more people are selling their homes due to circumstances, and they become renters. So when you actually own the rental property, whether it's an apartment building, build to rent community, whatever it is, your pool of potential customers grows. So recessions aren't too bad as long as you own the real estate. So that's number one, right? We are becoming a nation of renters. But I have some interesting stats now I want to share with you about a very interesting age group that I happen to be a part of. And this is a big demographic driver right now in terms of build to rent. So it all comes down to demographics, right? So right now in the build to rent space, the tenant profile really comes down to two different things, right? It's couples and couples with families. So you got, a couple, on their own, probably a furry pet of some sort, because that seems to be the trend. My fiance is on me all the time to add a furry friend to our family. And then we have couples with families. So one kid, two kids, whatever it is. Those two types of groups make up the bulk of build to rent communities. They're tenant based. And who is making up the bulk of this people? I kind of teased it before. It's people in my age group. It is millennials. So, and millennials are age 26 right now. I had to look this up, right? It's 26 to 41 right now, and I fall kind of smack dab in the middle of that. Now, the interesting thing is there are a whole lot of millennials out there. There are 72 million millennials, and they are in that 26 to 41 age group with a median age of 33 years old. Now, this is significant, right? Because we've seen that millennials were delaying having children, right? That's being really pushed back. Millennials were really focused on their career. They want to live the lifestyle. But now they're at that age of 33. And there's something that happens if you haven't had a child by age of 33. There's a biological clock that really starts ticking pretty strongly somewhere around this age, right? Because for your childbearing years are shrinking pretty fast at this point. So millennials are starting to have kids now. They delayed it, but now it's baby making time. So what's going to happen when these millennials who were a little bit more transient, they were single, they were living in apartments, what happens when these millennials start having kids, right? They want to change their living lifestyle. They don't want to live in an apartment anymore. They want to start living in a house, right? That's what they grew up in. They were used to living in a house. Well, we just found out that home ownership isn't possible anymore for a whole lot of people, but they still want that living experience for their families, right? They are couples or they are couples with children. So millennials want to recreate that housing environment that they grew up in when homeownership was a little bit different, but they can't do that through actually owning the house right now. But they can do that through renting the house. So this is what is really driving that build to rent sector. It's millennials getting together, having babies now. They're making babies. That's the fun part. And now they need to find a place to live to raise their family, and they are shifting to build to rent. Now, there's a couple reasons why that is, right? So millennials, they're now established in their professions. At the later bracket of millennials, age 41, they're starting their 40s. They're very established in their careers. They have income, even though it's being inflated away with everything going on. They still have good income, right? So they can afford a nice place. They may just not be able to afford actually entering the housing market with the financing and the capital requirements to buy their first house. But they actually want a nice space. They don't want to live in a cubicle anymore. That was okay when they were younger, but now millennials actually want a nice yard. They want, a fence. If they have a dog and children, they want, them to be able to run around and do all that kind of house stuff. Like, I'm in the same situation, right? My fiance and I were getting married, and it's house hunting together, right? Like, that's one of the things that's going to happen because we find ourselves in that age bracket. And here's an interesting thing too about furry pets. About 70% of this demographic is going to have a pet. And if you know one thing about apartment buildings, some apartment buildings, they're pet friendly, others are not. Living beside somebody in an apartment unit with a dog that's barking at all hours of the evening, that's not something that's very appealing. So if you can actually take that renter lifestyle, right? So that renter, take them from an apartment building and put them into more of a traditional home, that they're still getting all the benefits of the yard, their own place. It feels like a home, but they're renting instead of actually purchasing it. And this is where build to rent comes in. Now, the premium that these millennials are willing to pay is actually quite interesting. So millennials are willing to pay a 10 to 20% rent premium for all the benefits that a traditional home provides, right? So they're willing to pay 10 to 20% more for the same product, as long as it's giving them that home feel, right? With the white picket fence, their own thing, whether it's a townhome, whether it's a detached home, they're paying for this stuff because this is what they want. They are establishing their careers. They're making babies now. They have pets. They want to have that home that they grew up in. So this is a huge demographic push right now. And this is why we're seeing rent to own absolutely explode, because we have the numbers right here, the age bracket. This is what's really pushing and driving the explosive growth in rent to own. And when you look, demographic shifts, demographic changes, those are one of the 7 key market drivers I look at when I'm analyzing real estate markets. And you can't dismiss this huge group of people making life changing or or life-based decisions because they're making babies now. Their median age is 33, and that clock is ticking, and they only have so many years to do it, and they want to live in a home that's going to support that family and move out of their more like transient, single lifestyle where they were hopping from apartment to apartment. So that is huge. So I wanted to share with you the top 3 build-to-rent communities right now, or the cities where build-to-rent is absolutely exploding. So the top 3 build-to-rent markets, and I'll just say BTR, it's a lot easier to do. So the top 3. So let's start with, I'll give you 2 honorable mentions, right? So we've got Riverside, California, and then we've got Houston. So this was number 5, and this is number 4. So number 3, the top, the third best build-to-rent market in terms of volume of homes under construction, we have Columbus, Ohio, and that has 4,800, give or take, homes under construction. Then we have Dallas, Texas, and Dallas has 4,300 homes under construction. And then we've got Phoenix. Oh, I think I mixed up Dallas and Columbus. That's my bad. And then we've got Phoenix, Arizona, 6,500 units under construction. And, Arizona right now is on fire. It's just exploding with build to rent. And I'm actually working on something right now in Tucson, which has a lot of different drivers in Phoenix. So really interested to talk about that. And if we're able to have August on, we'll get into that kind of stuff. So huge markets right now, like build to rent is absolutely exploding. And like I said, is really being driven by that millennial demographic shift where they're changing their lifestyle and getting more into that traditional family unit, so to speak. So that's for that. So I want to make sure that you are liking and commenting on this video because I want to give away a free t-shirt right here. Unit size matters. This was actually an absolute hit. So let me go back over here and see how we're doing with Katie. So Katie, how are we doing with comments right now? Do I have any shirts to give away? That's awesome. I see a whole bunch. So Katie's going to have to be picking up a shirt. One other thing before we take a quick break and then come back. So we are also giving away a free ticket, a free loaded elite ticket to the multifamily conference every single month. All you have to do, if you're liking and commenting on this video, you're automatically put in, and we are going to be selecting somebody every month to get a free loaded elite ticket to the multifamily conference. So don't be shy, hit the like button, leave a comment. And what we'll do is we will take a quick break now, and I'll see you in about a minute. All right, so we are back. Welcome back. We are still having some tech issues with August, so we will improvise on the fly. It's all good. I was just reading, so Victoria, a great comment there. Yeah, it is kind of funny that I am wearing a unit size matters, and we were talking about making babies. So that's awesome. So one of the things I do want to mention is, what build to rent actually gives you in terms of exit options. So maybe I'll head back over to the whiteboard here. And we do have a t-shirt to give away. And you know what? Maybe what I'll do, since we're having some tech issues, we'll give away one t-shirt now, and then we'll give away a second t-shirt just because I feel like it. So Katie, I think we've got the first t-shirt. So Sharon Kaufman, Yeah, Sharon Kaufman, you are going to win the free t-shirt. So what we'll do is we'll get in touch. Katie will send you a private message. We'll get your address and all that stuff, and we'll mail it out right to you. I'll give away a second t-shirt. So maybe put a question in the chat. We'll get some questions in here. Put a question in the chat, and I'll hand out another t-shirt, maybe a mogul in the making t-shirt for the best question. So that's awesome. So whenever we're looking at an investment, right, we always want to have our exit options figured out in advance, right? So we find an opportunity, we underwrite, we model the opportunity, we figure out our business plan, whether it's in a value-add apartment or whether it's a built-to-rent community, whatever it is. We need to figure out, okay, well, how are we going to exit this deal? How are we going to generate the profit that we need to make? And you're going to look at a whole bunch of different market conditions. You're going to stress test your deal. Well, what if cap rates really loosen up when it's time to exit? What if interest rates really skyrocket? What if NOI falls during that period? You want to come up with all these different scenarios. Now, how you exit the deal, how you actually sell to the next buyer is going to really impact your options when it comes to getting out. So build to rent actually gives you a few different options that you might not necessarily get with your traditional apartment building, which is what I talk about all the time on this channel. So with build to rent, you have a couple options, and I'll just use my Tucson deal as an example, right? Option number one, so I'll say exit number one, is you're going to sell all 71 units together because it's a 71 unit deal. You're going to sell all of these to the next buyer, right? So just like a typical apartment building, right? You sell the apartment building to the buyer, they take over, they implement their value add plan because you've left some meat on the bone for them. They're going to take that and run with it. But the second option that we have with build to rent, now we don't really have, I guess you could do a condo conversion with an apartment building, but that's generally not something you're going to do. For the exit option number two is we can actually sell each individual units, right? If we have to, let's say something really significant happens in the market, and we have to liquidate some units, we can actually sell off 10 units at a time if we really have to a buyer. We can sell off 5 units, we can sell off 20 units, we can sell off half, we can sell each unit individually, all 71 units, and that really gives us a lot more flexibility in what we can do. Now, I'm telling you right now, the plan is obviously to sell all 71 units as a package, as a community to another buyer. But just looking at your different options, selling piecemeal individual units, little blocks like that gives you something that you generally don't find with an apartment unit. So Katie, let's go over to some questions. Let's see if we have any questions today on the live stream. And here we go. Sharon's asking, Sharon, you got your t-shirt. That's awesome. Okay. When did the selling off individual apartments here on? Oh, yeah. That it does happen. Generally speaking, if you have a larger building, you'll just sell it to the next buyer. But yeah, you can definitely do a condo conversion, sell off individual units, however you want to do it. That's definitely an option. And I do know some people that have even gone like the short-term rental way. Victoria, great question. I may have missed this, but what kind of lending terms are typically available for build to rent? Now, here's the really exciting thing. A lot of lenders are treating build to rent just like a multifamily deal. So nothing really changes there. And maybe no, I won't go to the whiteboard because really you're taking everything that really goes into an apartment building, but it's just a different way of doing the project. So, maybe I will go over to the whiteboard. Okay, so the reason is, right, we've got apartment, I'll say build to rent. And this is totally off the cuff too. All right, so we'll figure out what we're going to do. Okay, so with apartment building, you're going to have management, right? You're going to have on-site let's say you have a 100-unit apartment building and a 100-unit build to rent community. You're going to have on-site management to manage the property, right? Very similar. Build to rent It's the exact same thing, right? You're going to have your community manager there. You're going to have your rental office. Not only your leasing agent to show everything, you're going to have your maintenance staff, all of that sort of stuff. The plus I would say with build to rent is it's like a house. So generally people take better care of their house because it feels like a home. If they have a family in there too, people generally are a little bit easier on the property as well. So that's the same. In terms of, scalability there, so number of units, or the number of tenants, it's the same. 100-unit apartment building, 100-unit build-to-rent community. It's very similar, right? The cash flow is going to change a little bit, but the bonus here, like with apartments, if you're doing your traditional value add, you're going to go in, you're going to have your capex expenditures, right? You're going to renovate the interiors, exteriors, do all your different kinds of work. With build-to-rent, you're actually building a new rent product, so that changes a little bit because hopefully the plan is you're not going to have major expenses in the first 5 years because you've just built that product and you're building it to last and to be durable because you're going to be renting it, right? So minor differences, but the scale, the size of the units doesn't really change. And then you've got your cash flow. So if you have an apartment building, you're implementing your value add process, depending on how much capex, if it's stabilized, unstabilized, that kind of thing. You may have cash flow from day one. You may not have cash flow from day one. Build to rent, you're going to be having, you have your construction period and then your rent starts. But, if you were to do the same thing with build to rent, so I mean, like, once you build the property, you can roll into conventional financing. And the lenders are right now, they're basically treating an apartment building and build to rent very, very, I would say in very similar terms. So lots of the products you're able to, use from apartment buildings and then also with build to rent. So I hope that answers your question, give or take, but it's very similar and the lenders are treating it mostly on the same plane. So I hope that answers that question. Awesome. And then we had some other ones. If you, Sharif has a question here. If you will sell, can you put that? Oh, do you see much? If you will sell only some units, are we going to break the mortgage? Yeah, good question. Well, that's going to be all. It's going to be depending on how you structure everything. You may have different parts of the deal wrapped up with different financing. So that's going to be very specific. But let's put it this way. If something really happens in the marketplace, Sharif, and you need to liquidate, you're going to be working out some options on the financing side. Maybe you'll refinance the deal with just the remaining units. Like so many different things could happen. But yeah, you are right. But what just like similar with an apartment building, what am I trying to say? Yeah, so. I'm not sure what I'm trying to say, but you would. Okay, let me put it this way: if with the current Tucson deal, we're actually financing in different stages as the product's completed, so we're not actually building the project. We have the contract from the builder, so our debt doesn't even start until the home is finished. So that takes off a whole bunch of risk, and then we're doing that in stages, right? So we've got stage 1, stage 2. Stage 3. So our debt is structured a little bit differently. So maybe that helps, helps that situation too. So we're basically putting debt on the first chunk of homes, and then we put additional debt on the next chunk of homes, and then additional debt on the third chunk of homes. So if we had to sell off like the first chunk, we could do it that way. So I hope that answers that question there. Okay, let's. Do you see much build to rent in Georgia? Yeah, actually, when I was looking at the top 10 list, Georgia was on there. I can't remember off the top of my head, but in lots of tradition, well, I should say in lots of major metros, you are seeing a big surge of build to rent. But sorry, Sharon, I can't remember off the top of my head where Georgia ranks in terms of cities on the list. I probably should have brought that. Joe's asking, build to rent sounds like a great opportunity. Where do we find investment opportunities like this? Well, you can actually send me a message and we can chat about how you can invest in some of my opportunities and all that sort of stuff. We'll have a conversation and we'll really find out, what your investing goals are, where you want to go with your investments, and whether or not it might be a good fit to work with myself and my team. And if we can do some business together. So just send me a message, or you can go to callseth.com and schedule an investor call if you are interested in that sort of thing. Katie, do we have any other questions? I'm not sure. You know what, Katie? Let's pick a question right now. You know what? Sharif, let's send you another t-shirt. I just made an executive decision, Katie. Let's send Sharif a t-shirt. We'll send you, Sharif, a Moguls in the Making t-shirt. So just send Katie a message. So send me a private message here. Sharif, I see you're on Facebook. So send me a private message and we'll get your address and all that good stuff. And we'll mail you off your t-shirt. So unfortunately, August had some tech issues. We couldn't bring him on today. That's okay. We'll bring him on another time. A good friend of mine, really good guy. So really looking forward to sharing his expertise with all of you. So maybe what we'll do is, oh yeah, Sharif's excited for a shirt. That's awesome. So we'll get those in the mail for you later on today. So just a quick reminder, if you're watching this on the replay or if you're live, hit the like button, leave a comment, because we have our monthly draw for a free elite ticket. It's loaded, so that means you get into the Friday quick start workshop. We have an intensive one-day workshop on the Friday at the conference. All day long. I've invited some really great people to take you behind the scenes. And then we've got Saturday and Sunday at the Multifamily Conference. We've got Grant Cardone coming in. Alex Rodriguez, who you might not know, owns 15,000 apartment units, huge multifamily investor. And then we've got investors literally from every single province and every single state coming to this conference. It's going to be the biggest real estate event in the country. So really excited for that, May 26th to 28th. 2023 in Toronto. Just go to multifamilyconference.ca. But like I said, we're giving away a free ticket, loaded free elite ticket. Plus you get into the after party. So basically I rented out the Uncle G is awesome. He definitely is. So with the after party, actually, Katie will back me up here. So I rented out the best nightclub in the entire city. It is insane. It's called Rebel Nightclub if you've never been to Toronto. And I also rented out the iconic CN Tower. So if you're new to Toronto, it's the big tower that looks over everything. I rented that out. So for VIP tickets, we're doing a special party in the CN Tower because I rented it. So we're definitely taking things as Uncle G says, we're 10xing the event for 2023. It was fun in 2022, but we're doing more things for 2023. So hit the like button, leave a comment, and you can get entered into the draw for that. So until Wednesday, because Wednesday we have Wealth Wednesdays, until Wednesday, I will see you guys later. Happy investing. Don't forget, like, comment, and we'll be giving away some more Unit Size Matters t-shirts. So have fun. All right, see you guys later.